Okay, I want to welcome everybody to the How to Make Money Trading Stocks webinar. Joining us from Zurich, Switzerland is Michael Bishop. How are you today, Michael?
I'm fine. I'm great. Thank you.
And so it has spring officially sprung over there in Europe. I mean, you're enjoying the fresh air, the mountains, the flowers, and all the beautiful scenery.
Well, absolutely. I mean, it's like a flower. Suddenly, it's how do you say? You see all the colors and
Yeah.
also very nice weather. Even like almost like summer.
Wow. And so, yeah, I was talking to some people who lived up in Colorado, and they were saying that actually they had several really nice days, but then all of a sudden, bam, it turned cold, and they got some snow. Maybe that was Idaho. Want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. And for everybody, please realize that this webinar now goes hand in hand with the webinar we do on Mondays, which is After Market Monday. Both of them will last somewhere between 10 and 15 minutes, where we just hit it really hard and fast, what we're seeing in the market, what are some of the things that we're trading, to give you some ideas on what's going on for the future, for the for the week. And on Friday, we kind of review what we covered on Monday. So we'll do a real quick market review, then get into the stocks and ETFs setting up and what we, what the outcomes were. Basically, here's where we sat as about 9 o'clock this morning. Dow was down a little bit, S&P was down a little bit, just a very little bit from where it was yesterday. NASDAQ NASDAQ composite was up a little bit. Russell was kind of just like treading water. And active trend trading, we actually closed out our Tesla position for 100% gain on that one, and so that's we're pleased with that. Let me see. Oh, here's where I'm supposed to go and look at the charts for the market. So here we go. S&P. We were talking about the S&P last week. We basically had defined this lateral channel going from about 24.05 down to 23.29. As we can see on Thursday, price action broke above that, but didn't run very far. I mean, it broke out and then kind of just today is just doing a kind of a little not a bearish harami, but just a little spinning top, and so we got a breakout without a lot of follow through. I'm going to be paying attention to that going into the end of the day. I am not necessarily interested in throwing out any type of short position because the mood of the market is still to swing a little bit higher. But at least the S&P is now broken out. The thing that gives me some pause for concern, of course, is the negative divergence that's going along with this. We're making a new high, but the momentum is pointing down. I got a little bit of negative divergence here on the market forecast. That's on a weekly basis. And so, Michael, you didn't do a lot with the S&P this week, did you?
I flattened. So I'm no SPX position, no NASDAQ position.
Okay. Well, I've still got my strategy 3 position, which is just a long-term straddle that expires in January of next year. But other than that, well, I also open up. I open up a position in NVDA for strategy 3 moving forward. But other than that, I flatten out the rest of my portfolio, waiting for new triggers to get into some of my the Magnificent 7 ETFs that we follow.
No, I mean I have a lot of little positions, but no major SPX or NASDAQ up move or down move.
Okay, so you're kind of a little bit neutral right now in DX.
Yeah. So really a little bit, you can call it swing trading for some individual stocks, and the commodities I still like.
Okay. So NASDAQ, here we go with the NASDAQ, similar type of thing. clearly a negative divergence as prices are pushing higher. What is that going to spell out for in the near-term future? Oftentimes when you get these negative divergences, it leads to, or at least it's a clue that you're going to be having a more significant pullback into some moving averages. We'll wait to see. Price action hasn't confirmed the negative divergence here. We've got the negative divergence also going on the weekly charts. But price action itself, remember, is moving higher. So, ever since for the NASDAQ, ever since June of last year, basically any type of pullback into the moving averages could be considered an opportunity to buy. The pullbacks have been working, and so right now we're extended, and so we're basically just waiting for a pullback. Now the Russell is, the pullbacks are, it's not a pullback type of index as it is right now. It is a very much range-bound index with 1340 on the bottom and about 1413 on the top, up to 1420-ish. Price action came off of that a little bit starting last week, but has gotten up into a resistance area. So you can see that the small cap index is the weakest of the three tracking indexes that we track. Might it pop up and run all the way back to up to the top between the 1410 and 1420? Perhaps. I'm liking the Russell primarily because it's stuck in a very well-defined range, and right now it's kind of in the middle or no man's zone on that range. So I'm not really wanting to take action on it right here. But if we get back down to the 1350 to 1340 level, I'd be looking at potentially getting into a long position. We get up here to the 1420 to 1410 level. That's where you could basically put something on down to the downside. Now, why could you do that? Because this zone, this range from the low to the high is about 3.5% on the Russell and the IWM. So that translates to 3.5% translate to about 9.9% if you're going to be trading the leveraged ETFs. And so this is one of those where you trade it against support to move up and against resistance to move down. So yeah, that's all I've got on the indexes. Any questions, anybody? Or Michael, you got any comments?
Well, one comment is that I kind of had the feeling end of last year that Europe could surprise on the positive side.
Okay.
And it definitely happened. And two things I find quite interesting. One is the market situation, that it could well be if the US indices are stuck now a little bit, that people pour the money into Europe and China and everything basically what is still investable.
Okay.
And the other thing is, I mean, if it looks a little bit like this, that we are just getting into a crazy market where valuations are not important anymore, I mean, then it can go up significantly, because I mean, as soon as kind of a big part of the investors just buy everything.
Yeah.
I mean, it's like the Bitcoin phenomenon. I mean, if there are more buyers than sellers, prices go up. Full stop.
And so, let's see. Troy asked, any comments on the divergence between the Russell small cap gains versus the mega caps? And Troy, interesting you asked that question. We're going to be talking about that, and I will be putting out an article that Mike Traeger wrote that's talking specifically about the lagging Russells and how the FANG stocks, remember the FANG stocks are actually holding up the NASDAQ, the S&P and the Dow, basically, not the Dow so much, but the NASDAQ and the S&P are actually holding up because they're so weighted towards those 5 FANG stocks or 4 FANG stocks. And so so we're going to be talking about that. Mike wrote a really good article. That'll be coming out this weekend. So one of the things I'm waiting for, and I'll just share with everybody, on the Russell, I know that Russell with the seasonality in the October time frame is when it typically goes on its big run, and so I'm just basically biding my time until we get to the October time frame, and then plan on going on the Russell in a big way, because normally it outperforms the S&P significantly during that time frame. So let's run through the rest of the slides and get everybody on their way. So here's a percentage of stock above their 20-day moving average, and this also speaks a little bit to the what we're talking about, Michael. This is the NYSE, which shows that 45% of the stocks are above their 20-day moving average, where and it is basically just kind of like meandering. The NYSE is, where the S&P is pushing up to its newer high, and so this is telling us that there is a lag factor on some of the non-weighted indexes compared to the weighted indexes. Here's where we closed out UCO this week. UCO got hit yesterday. It was looking like we're going to rally up nicely on the OPEC news, but then OPEC kind of weaseled out of what it was doing. But we'll keep looking. We'll get another setup on UCO. Tesla's doing a great job this morning of bouncing higher. I want to remember that the reality of trend trading is, one, know the trend, define the area of interest or value where you're going to take action, then define, take your action, define the triggers, the strategy, and the targets. And remember, if the mechanical side of your trading isn't working, check the mental, physical, and spiritual side of your trading. So we closed out the Tesla trade it made, and so that bumped us up nicely, where we're basically on track with our 40% for the year type of return. Here's what we booked profits through the 19th. We booked one other. We closed the UCO trade. And then here's what we've done. Closed the Tesla trade, made 100% on that. That was basically covering the capital that we had invested in the Tesla straddles, plus made 100% on top of that. So that we closed that out. Total strategy 3 is bumped up there about 57.88. We closed out Nugget because it wasn't performing well. Spiders we're still holding on to, and just opened NVDA today. NVDA is one of those that will give us a really great opportunity, because it's a little bit like Tesla, but a little bit like the S&P, so it's not as high valued as Tesla, and it'll hopefully give us some opportunities to gain some more going into the end of the year. So I'm going to look at a couple of charts on the things that we're looking at, but I just want to remind everybody, hey, I believe, does anybody else know, is Monday a holiday? If it's Memorial Day, I mean, it is a holiday, but is the market open?
I don't think so, no.
I don't think so either.
No, as I'm pretty sure.
Not open. Okay. So enjoy your Memorial Day, and remember to, Just remember those who've given their lives for the defense of our country, the U.S., and we'll be starting up premium members with the next final hour shortly, and until Monday or until Tuesday, aloha and trade profitably. Let me whip up some charts I want to take a look at. I'm guessing it's closed. So you draw a line on the Russ weekly chart, early 2016. October looks like we will be touching long-time support. Where'd you say that? Okay, let's see. And so, well, there's late 2016 over here on a weekly chart. I don't know if we're going to be falling down to this support down here or not. We'll see. Early 2016. Well, early 2016 is about right. I'm looking. Early 2016. I mean, you could go all the way back to there. You could actually go back all the way to there. That's 950. I don't know if we're going to get down to 950 or not. We shall see. But I will basically talk real quickly about NVDA. We open a position on NVDA. NVDA is actually looking pretty good, continuing to push higher. We bought and sold the, or not bought, so, but we bought the 140 straddle that expires in January, and then we'll be selling against that. IBB looks, now I'm not going to be trading IBB, but I'm watching this for it to basically kind of finally put in its, its lows with the TSI on a daily and weekly chart, and then of course we will be looking towards LABU when we go to trade that. That's a 3 times leverage. So that looks good. LOGM. Now this is just a regular stock off of the IBD 50 list, LOGM. It's looking really good from the aspect of it is finding support here at the 50, waiting for that TSI tick up. Hasn't happened yet. So that is one to keep watching out for next week. Momo. Again, looks like it did a pullback down to the 50. If we get this TSI turning back up, that would be a potential entry for Momo. And then lastly, GRUB, Grub, not Grub4, Grub, not, oh gosh, okay, Grub. There we go. Grub's getting a little bit of a tick up today, and so I'll be watching that going into the close today. It's moving back above its 8 and 20-day moving average, and so I'll be making a choice whether or not I want to buy at the close or wait for a pullback into today's candle for moving up. A move back to its highs would be about a 6 to 7% gain, and if it breaks out from there, then we're off to the races again with Grub. Waiting to see what this what the volume looks like too. So that's it for this afternoon. I hope that gives you an idea of things that we're going to be looking at for next week, and so a couple of trading ideas as we have indicated: LOGM, Grub, and Momo, and IBB perhaps going into waiting in for what's going on next week. And then we're also looking at Nugget. We'll be talking about Nugget more in the final hour. So, okay, guys. Michael, thank you very much for joining us today. Have a great weekend, and we'll talk to everybody on Tuesday.
Thank you. Have a nice weekend too. Bye.
Thanks, Michael. Bye-bye. G'day traders. Hey, follow the links you'll see shortly on the screen to see how you can save 40% on a membership to active trend trading. G'day.